And we have our weekly UHERO report, the University of Hawaii Economic Research Organization. And joining us this morning is Sumner LaCroix, the economics professor at the University of Hawaii. Good morning, Sumner, and thank you so much for joining us.
Good morning, Mahia.
Well, this morning we've got a couple big topics, and everything is up. That's the word.
And that's good in this case.
Oh, really?
The stock market has, just been on a long ride here. From hitting a low, this is the Dow Jones Industrial Average, from hitting a low of about 6,600 back in March of 2009, it's now flirting with 11,000. That's a huge recovery.
And let's take a look at the live stock numbers this morning, Sumner. Let's take a look at the numbers. There we are. The Dow Jones Industrial Average is up 44 points, still below 11,000. As you say, flirting. I like that. Flirting with 11,000.
Right. Now, all of these averages are still below their all-time highs. The Nasdaq is way below its all-time high, which was up around 5,000. The Dow's all-time high is 14,000. The S&P is up around 1,400 for the all-time high. So there's been a huge recovery in the stock market, but we're still not back to the heights of 2007. Now, there's been a lot of debate among economists and financial economists lately talking about, is the market rally basically over? And two economists really epitomize this. Robert Shiller at Yale, who's the author of the book Irrational Exuberance, looking at the 2000 stock market crash. Shiller believes that we're basically done, that price-earnings ratios are at historically high levels, and that we're not going to see much more gain. Jeremy Siegel, another really prominent financial economist at the University of Pennsylvania, he's the author of a book, Stocks for the Long Term. It's a great book on the stock market. I highly recommend it. And he basically argues, no, there's a lot more room for growth. The stock market could grow about another 25%.
And so for the investors out there, they just have to be cautious?
Well, I think when you start seeing prominent people, some saying, oh, there's a lot more room for growth, others saying, caution, we're about to retreat, investors should take a close look at their own investments and just make sure that they're not caught up in the momentum of the day. Because a lot of people now are like, oh, the rally, it's been great, and it's going to continue. And, well, maybe it'll continue, maybe it won't. It's time for a little bit of sober caution. Right.
And also in terms of up are the gas prices. Let's take a look at our statewide gas prices right now, which we just got out this morning. This is according to AAA. Oahu, $3.42, Maui, $3.88, Hawaii Island, $3.57. These are all rising.
Yeah, gas prices have been somewhat stable since the start of the year, but then again, they've been rising a cent or two this week, that week, and all of a sudden we're up 20 cents now for the year. The big increase in gas prices came last year, last summer, and last spring, where they went up about $1.40. Still, it's another 20 cents this spring, and one has to look at this and ask: Are we likely to see further price increases? I think a lot of this is going to go back to the situation in the Middle East. If we start seeing tensions with Iran increase, we're going to see gas prices spike. If things with Iran just kind of motor on or they're resolved a little bit, then we're likely to see actually a small fall in gas prices.
All right, Sumner LaCroix, thank you so much for joining us. Oh, yeah, occupancy rate up. That's a good thing.
Hotel occupancy, yes. That's very good. It's just good to get more people coming to Hawaii because word of mouth is an important form of advertising. As more people come here, they bring back the news that they had a great time in Hawaii back to their friends and relatives. And they're more likely to come.